Welcome to The Explainer. So, today we're diving into a really strange, honestly fascinating situation unfolding in the real estate market right now. If you've been paying attention at all, you've probably noticed that everything just feels kind of frozen, right? It's not a crash, but it's definitely not a boom either. Transactions are slowing down, those distressed deals are basically ghosting us, and brokers, well, they're finding themselves completely stuck in the mud. So let's unpack this together, because figuring out the actual mechanics of this freeze is literally the only way you're going to navigate it. Take a look at this quote. Right now, the market has buyers without urgency and sellers without fear. I really want you to let that sink in for a second. This isn't about property values plummeting. No, this is a pure psychological standoff. We're stuck in this bizarre middle ground where absolutely no one is willing to blink first. And, well, when nobody blinks, the whole market just freezes. Okay, let's dive right into our roadmap for today. First, we'll define this wait and watch market, then unpack the buyer-seller deadlock. After that, we'll look at why brokers are trapped, tackle the off-plan problem, and finally, we'll open up the Smart Broker Playbook to give you some survival strategies before mapping out exactly what happens next. All right, part 1, the wait and watch market, navigating geopolitical and economic uncertainty. So a wait and watch market is a really distinct phase. It's this period where buyers just delay their decisions, sellers flat out refuse to offer discounts, brokers lose all their momentum, and investors, they go totally on the defensive. Right now, when you look at global instability, economic slowdowns, and those rising interest rate pressures, it makes everyone incredibly cautious. I mean, even ultra-wealthy investors are putting their plans on ice. Why? Well, because in a market like this, liquidity matters, cash is king, and people want to avoid tying up capital in risky long-term commitments. Which naturally brings us to a super fascinating question. Why are buyers hesitating if the market isn't actually crashing? Seriously, think about the underlying psychology here for a second. If prices aren't falling off a cliff, why is the checkbook staying firmly in the drawer? Well, here's the core truth. In uncertain markets, buyers just don't think about profit first. They think about protection, period. Right now, buyers are out there hunting for distressed deals. They're totally convinced that someone somewhere is going to panic sell or that developers will suddenly slash prices. They're basically waiting around for highly motivated landlords in deeply discounted inventory. But the reality? Genuine distressed sellers are about as rare as a unicorn right now. The panic just isn't materializing. So, the buyers just keep waiting. Let's move on to section 2, the buyer-seller deadlock, the psychological Mexican standoff. So, on one side of this standoff, we have our buyers. They're fearful, they're defensive, and they are fully expecting deep discounts. But then, look at the other side. You've got the sellers. They're financially stable. They've got holding power. They aren't desperate at all. They look at resilient global hotspots like Dubai, for example, and they're completely confident that demand will bounce back. They're anchoring their expectations to previous high transactions or those peak launch prices. Basically, they're looking at their neighbors' prices and saying, nope, I'm not dropping a single dime. And that brings us to this perfectly accurate summary. Buyers expect discounts, sellers expect recovery, and brokers are trapped between hope and hesitation. That is the absolute core tension of our current reality. We've got two immovable objects, and sitting right there, crushed in the middle, is the broker. Which leads us to section 3. Why brokers are trapped, caught in the crossfire. Look, brokers are dealing with an absolute compounding nightmare right now. Inquiries are weak, and when you do finally get a viewing, clients just drag their feet. The gap between what a buyer will pay and what a seller will accept is frankly a massive canyon. On top of that, brokers are drowning in a rising tide of fake leads, basically dodging them like Neo in the Matrix, all while the quality of real inventory just keeps dropping. Commission cycles are stretching way out, which severely squeezes cash flow. Add in fierce competition from developers marketing directly to consumers, plus all these new AI marketing tools, the pressure is intense. But here's the real kicker. A lot of brokers got way too comfortable during the boom periods, just relying on easy sales. Well, guess what? The easy market is gone. The market right now demands real, hard-earned skill, not just luck. That brings us to section 4, the off-plan problem, the shifting landscape of new developments. This sector used to be an absolute gold rush, but now it is visibly slowing down. We're seeing massive oversupply because way too many aggressive project launches hit the market all at once. Investors are exhausted. Actually, many of them already hold multiple units, so that investor fatigue is really setting in hard. Plus, believe it or not, the secondary market is actually offering much better value in a lot of cases right now. Add to that a growing caution about getting locked into long-term payment plan liabilities, especially when developers have set completely unrealistic launch prices and the result is pretty obvious. Bookings are slower, developers are quietly offering hidden discounts, and broker commissions in the off-plan space, they're becoming highly, highly uncertain. So, facing all of this, the deadlock, the off-plan friction, cautious buyers, stubborn sellers, what do we actually do? How do you break out of this freeze and actually survive, let alone thrive in this crucible? That is where Section 5 comes in, the Smart Broker Playbook, from salesperson to trusted advisor. Okay, pay attention, because this is how the best players evolve. Step 1. Stop chasing volume. The market rewards quality right now, so focus only on serious buyers and motivated sellers. Step 2. Realize that clients don't trust high-pressure sales tactics anymore. You have to step up and become a true market advisor. Educate them, explain the trends, and give them honest risk analysis. Step 3. Aggressively build your personal brand. YouTube, LinkedIn, Instagram Reels, do it all. Because in a slow market, attention is actually cheaper. When recovery hits, the most visible brokers are going to win massive market share. Step 4. Stop staring at fake listings and hunt for real distress intelligence. Build a network with bankers and property managers to find out who actually has mortgage pressure. Step 5. Diversify your income. Don't just rely on sales commissions. Get into property management or leasing to stabilize that cash flow. And finally, Step 6. Master the psychology of deep negotiation. You aren't just showing properties anymore. You are actively managing fear and emotional resistance. Alright, our final section, Section 6. What happens next? Mapping 3 future scenarios. When we map out the probabilities here, 3 clear paths emerge. Scenario 1 is a strong recovery triggered by improved global confidence. This is where those patient sellers finally win. Now jump down to Scenario 3, which is a selective correction. That's where oversupplied areas finally drop in price, but premium locations hold their value. But you know what's truly fascinating? Scenario 2, the sideways market. If the status quo continues, prices stay relatively stable, but transaction volume stays incredibly weak. Guys, this is the most likely short-term reality. And remember, low transaction volume hurts brokers way more than it hurts property owners. At the end of the day, transaction volume tells the real story of the market, not social media hype. Which brings us to this fundamental truth. Easy markets reward luck. Difficult markets reward skill. Every single real estate cycle acts like a giant filter. This current freeze we're in, it's actively removing the weak players who just rode the coattails of the boom. And it is forging true, information-driven experts who are actually willing to put in the work to become trusted advisors. So, look, the market isn't dead. It's simply waiting for confidence to return. So the question I have for you is this. Will you let this market freeze you out? Or will you use this time to build the trust and the skills needed to absolutely dominate the market?